Today, let's break down Clause 39 of the Income Tax Bill 2025, which corresponds to and replaces the earlier Section 43(1) of the Income Tax Act 1961. Clause 39 deals with actual cost of business assets and what should or shouldn't be included in it. Imagine you purchase machinery for your factory. Here's how the new provision works. If you've claimed input tax credit under GST for that machinery, the GST component will not be included in the assets cost. If you've received a subsidy or grant that is not directly linked to a particular asset, the portion of the subsidy that reduces the asset's cost will be allocated proportionately based on the value of that asset in relation to the total assets to which the subsidy relates. In simple terms, the Income Tax Bill 2025 ensures that the actual cost of assets used for depreciation and tax purposes reflects fair, transparent, and consistent principles even when subsidies or tax credits are involved. This is the kind of clarity the new bill aims to bring. I am CA Pranav Goyal, simplifying tax laws so you don't have to decode them. Jai Hind.